Hey, welcome back. Tom Stone here. Welcome to part 2 of Forex Income Maximizer Professional Forex Trading Lessons. Today I'm going to go over a really special indicator that I call the Catapult, the Fibonacci Catapult. We're staying in the same vein with the first lesson. We're basically going to be giving you an indicator that's going to help you ascertain whether or not a move is going to continue or not. You know, as traders, we're always concerned with, is this a false move up? Is the trade going to stall? Or is this a false move down? Is the trade going to continue? Is it going to pop back up on us? So the Fibonacci Catapult is an excellent way to actually figure out whether or not a move is going to continue or not. And I'm going to show you, again, on a subsequent video, exactly how you can use this as an entry point and a really tight stop loss for your exit, because, again, we're always looking to protect our capital. You know, we want to live to trade another day. We never fall in love with a trade. We never marry a trade. We just, it's just one, at-bat in a series of many at-bats. You basically got to look at yourself as if you're a baseball player. If you're a 382 hitter, you're an excellent hitter. We're going to do better than that, obviously. We're going to be up in the high 60%, but we still, have to always remember there's a trade out there with our name on it, and we do not want to marry a bad trade and get caught in a loss trap. Okay, so this is an excellent way to ascertain whether or not a move is going to continue, and it gives us very low risk, very high reward. Okay, so the Fibonacci Catapult, and this is best used on 4-hour charts, daily, and weekly. Okay, these are great levels to do. You can throw them out on the daily chart, so you can actually, they'll last, a day. On a week, they're going to last a week. So it's a really cool indicator. So how does this indicator work? Well, it's a very simple system. And I'm going to go over a couple of rules with you. And again, on subsequent videos, a subsequent video, I'm going to actually show you how to apply it. So, but just hang with me. I think that you're going to be able to get it down really fast. Okay. On a higher time frame chart, higher time compression, 4-hour, daily, weekly. Okay. What you're going to want to do is we're going to have the close of the previous bar. So this, let's just say, for instance, now if you're unfamiliar with a bar chart, it's the same thing as a candle. The only thing a candle does is it encapsulates the close and the open and makes it, that big fat thing that looks like this, I have no use for that. I don't really trade Japanese candlestick setups, but some people do, and some people love candlesticks. I've always been a bar chart guy. Actually, I started my career doing X's and O's for traders on a trading desk. That's called point and figure charting. It's way a long time ago in a galaxy far, far away. But on the bar chart itself, okay, you're going to have your open and your close. Now, the close is always king, okay? And that saying goes back to the old commodity traders. Basically, where the market closed, that was the winner of the battle. So if you have a down close, okay, the bears won on that bar, okay? And, this is your open. So on a bar chart, the open is to the left, the close is to the right, just in case we got some newbies out there and they don't understand. That's basically what it means. On this side, is your open, and on the other side is your close. Okay, so let's just say this is a 4-hour chart, and this is exactly, what happened. The market closed lower here. For the Fibonacci Catapult, what we're going to do is we're going to calculate upper and lower price pivot points, okay? But they're really just based on Fibonacci ratios, okay? So what you're going to want to do is you're going to want to take the high and the low of this bar, okay? And let's just say we got 100 pips just to make things easy, okay? We got 100 pips from the top to the bottom, okay? What you're going to do with this is you're going to multiply your 100 pips by 0.236, 0.382, 0.618, 0.8. You can put your 50%. I actually don't use the 50% on this, but you could if you wanted to. I just think that's it's too much. So I scratch out the 50%. I go from 0.236, 0.382, 0.618, and 0.82. And then what I'll do is I get these factors. So actually this is going to be 23 0.6 pips, this is going to be 38.2 pips, this is going to be 61.8 pips, and this is going to be basically, 100 pips, okay? That's why I used 100 pips. It's real easy math, all right? So what you're going to want to do with these is, whatever the close was, you're going to want to add 23 pips to the close, and you're going to want to put a dashed line on your chart. Then you're going to want to add 38.2 pips to the close, and you're going to put a dashed line on your chart. And then you're going to want to add 61 pips from your close up, and you're going to put a line on your chart, and obviously, you got 82%, which is very close to 100%. Now, the next thing that you're going to want to do with this is you're going to want to subtract 23 pips from the close. You're going to want to subtract 38 pips from the close. You're going to want to subtract 61 pips from the close. And you want to subtract 82 pips from the close. So basically what you're doing is you're getting an upper and lower boundary. So we're also going to have on our chart, we're going to have our Fibonacci ratios, measuring top to bottom. What we're looking for is confluence of points. So in other words, if we have on this level up, on this 2.236, we also have a main 3.82 off of the 4-hour chart, basically almost laying right on top of it. We know that from this close, okay, we got double resistance here. However, this is the natural trick. This is the trick that I want to talk to you about. Whenever you have a down close on a bar, okay, it means a lot of traders are trapped up here. Okay, so they're really concerned with the break lower. Okay, because all that force of that weight of all those people that are trapped up top are basically going to be wanting to dump if one of these catapult levels goes. You're also going to get a lot of resistance up here because a lot of people are trying to get out. Now, if you do get a break up on a down close, okay, it's going to probably be pretty forceful. So you're going to want to use these levels as a gauge of momentum. Market comes back down, touches, can't break. Okay, now it's coming back up. So now you know that there's been a shift in supply and demand. And this is always what we're looking for as traders. We're just looking for that shift that can get us our 80 pips, 100 pips, 200 pips. We love those trades that we put on that just take right off in our favor. Those are my favorite trades. So, when you have a down close, you're going to be watching these levels. There's a lot of people that are trapped, up top. There's probably going to be some resistance here. But if it does ultimately break through, there is a shift in supply and demand. It means these guys are now nervous about this level breaking. So these Fibonacci catapult levels are excellent levels to gauge market momentum with. Okay, watching price action at these levels. And again, I'm going to show you on a subsequent video exactly how we set this up. Okay, so this catapult trade, Fibonacci catapult, really can get you in some really good moves. And I want you basically just to go back on a 4-hour chart, go on a daily chart. Real simple. Take the top, take the bottom, take the difference, get that range of the bar, okay? Multiply by 0.236, 0.382, 0.618, 0.82, okay? And add it to the close and subtract it to the close, regardless whether or not it's an up or down close. I'll go over some little tricks on the up or down close in the subsequent video. I don't want to get you confused. So you're going to be adding these levels up. You're going to be subtracting these levels down because you're going to want to see what happens at price action as the market comes to these levels, bounces off, comes back. Because we're going to set up, a Da Vinci style trade with these levels, and that's going to be on the video. You're going to see how you can have a really low risk entry, high reward trade. So I'm going to see you guys on that subsequent video. I look forward to trading in the trading room with you guys and showing you and sharing with you some other really cool professional trading systems. And we're going to make a lot of money and have a lot of fun. All right, welcome back, everyone. We're going over part 2 of the Fibonacci Catapult, more in detail for you. And this is the second video lesson from Forex Income Maximizer Professional Forex Trading Lessons. And I just want to give you an overview of exactly why we're using these indicators and why you need to use some type of indicator. And I think this one's a really great one, easy one to figure out so that you can really gauge price action at certain price points in the marketplace. The reason as professional traders we want
these levels or indication levels is so that we can make good trading decisions based upon what levels that we are projecting out into the future with. Okay, and the reason we need to do this is just as a pilot, when he pilots a plane, he uses his instruments. He doesn't only use sight. He needs to look at his instruments in order to fly the plane properly and safely, right? So this is exactly why we want to use these indicators. We want to have something that we're actually projecting what the market price points should be and what levels of interest we should have, so that we can make strong trading decisions based off of it. And if we're incorrect in our decision, we have a really quick escape hatch to reassess what the marketplace is trying to tell us. Now, I like to do this because I like to try to put what I call a perimeter around the marketplace, a fence around the marketplace, so I can gauge price actions and try to listen to what the marketplace is trying to tell me. We always want to try to be on the correct side of order flow. And this will help us get in the train before the train moves. Okay, and that's the whole idea. You know, you want to get in that train before the train starts going, moving, because obviously we want to be the first one on and, get in a move in its infancy rather than when it's basically matured and over. And that, causes a lot of traders to fall in love with bad positions. And, we don't want to do that. We want to always never marry a position. We want to protect our capital all times. And these indicators are like your flight instruments and will help you do that. Now, the Fibonacci Catapult is based on the notion that when price breaks certain levels on an intra-bar basis, it often acts as a precursor to further movement that shows strength or weakness for the remainder of that price bar. And that's the whole idea behind this. Now, the Fibonacci Catapult is best used on 4-hour charts, daily and weekly charts. Now, you can calculate for yourself, the daily level, which I have a daily price bar right up here with, it's an old bar. I'm just using it. I'm going to go over it as an example. And you can also calculate your weekly levels. And these will be important. You should keep them in your trading diary so that you know exactly where they are, and they'll give you an idea of what the market's trying to do, or what the market really wants to do. Again, we want to try to get in the train before it moves, and we want to get in, on the proper side of the order flow of the marketplace. Okay, now it's a very simple technique, and I'm going to take you step by step through it. And I'm just going to use this daily example. Then I'm going to go over a 4-hour example. Same thing, calculations are the same. So get a pen and paper and ready. This way you can actually take some notes, and you can watch this video several times until you get it down. But I assure you, it really won't take you much. It's very simple. Okay, the proper catapult levels to use are right here. We're going to use the 0.236 Fibonacci ratio, the 0.382 ratio, the 50% ratio. I kind of put a skew to the side because I do not personally use it. You can use it if you like, but I just don't use it. I like to see what's going on between the 0.382 and the 618, just like I like to see that what's going on the major fib retrace levels that I draw between the 0.382 and the 618. And then there's the 0.82 level. Okay, now remember, we're using these to basically put up a market perimeter, a market fence, and we're going to go up and down on a price bar using the same ratios. Okay, 0.236, 0.382. I don't use the 50, so I won't put it in there, 0.618 and 0.82. So how exactly do we do this? Well, we do it in basically 4 steps, real simple steps. The first step is that we want to calculate the range of the previous price bar. Now, how do you do that? What am I saying? I'm saying that if you're using a 4-hour chart, or this is a daily chart, so let's just stick with this example. If you're using this daily chart, what you're going to want to do about 15 minutes before this chart closes, okay, you're going to want to calculate your Fibonacci Catapult levels for the next bar. Okay, now the next bar is actually right there, but we're just going to stick and act like this bar is just closing now, and I'm going to take you step by step how to calculate these levels. Now, before I go any further, all right, I'm just going to show you this range expansion that I did here, this Fibonacci levels that I did here, and how I did them. Just like our other example, we broke through the bottom of this demand point. Okay, so I wanted to measure what's going on. So what I did was I took expansion levels down, the same levels that we went over on the last video. But I went from this supply point. This is a supply point. It's a high surrounded by two lower highs. And I went to the left this way and said this is the same price or higher. I looked for the price point that traded at the same price or higher. I could actually went up here if I wanted to. And said what's the lowest point in between this point and this point? Well, it's this one. So I dragged down a retracement level, okay, from this point to this point to try to gauge momentum. Now the marketplace broke down, and for all intent and purposes, it was saying that we were kind of headed towards lower levels at this point, okay? But we also have a down close here. We also have a head fake. So if you know what my head fake system is, terrific. That was an indication that perhaps we were popping back up. But again, let's just pretend that this bar is closing, and we want to calculate the Fibonacci catapult levels. Okay, so what we're going to want to do is we want to calculate the range of the bar. Okay, so how do you calculate the range of the bar? You'll take the high at 1.3601 and you'll subtract out the low of 1.3385. Okay, and you're going to come up with 136.01 minus 133.85 is going to give you a range of 0.0216. Okay, that's the range. That's just what happened. When it went up and down 216 points for that day. Now, what you're going to want to do with that, you're going to want to take the range of 0.0216 and you're going to want to multiply by all these ratios, 0.236. So 0.0216, the range of the bar, multiplied by 0.236 is going to give you a range of 0.0051, 51 pips. Okay? And you're going to take the 0.0216 and you're going to multiply by 0.382 and you're going to come up with 0.0083. Then, like I said, I don't use the 50%, but you can if you wanted to. I don't. You're going to take your range again, 0.0216, and multiply by 0.618, and you're going to get 0.0133. Then once more, you're going to take the range of the bar, 0.0216, multiply by 0.82, and you're going to get 0.0177. Now you're going to need these factors, the 0.0051, 0.0083, 0.0133, 0.0177. We're going to need them because what we're going to do is we're going to take these values and we're going to add them to the new bars open. So, 10 minutes before this daily bar closes, you're going to wait for the new bar to open. Now, what happened on this bar was that the open, 99.99% of the time, the open of the next bar is going to be, the close of the previous bar. So just so I don't confuse you, see the open of this bar was the same price. Okay, see the open there, 134.64.65 is the same price, opened at the same price. Okay, so the reason I'm telling you need to add it to the open is for gap open ups and gap open lowers, because we're using this, on the open of the next bar. But let's assume, this bar is closing in like 3 minutes, and we want to calculate, our upper level and our lower level projections for the catapult, and we're going to put them over here for the next bar. Okay, so we're projecting in the future for tomorrow what should be going on tomorrow. Okay, so the open of the next bar was 134.65. It's the same as the close of this bar. Okay, so we're going to add 51 pips to the open of that bar, and we come up with 135.16. So I'm just going to take a horizontal line, and I'm going to put it at 134.16. 135.16. I'm sorry, 135.16. Okay. Then I'm going to take the next level, 0.0083, okay, those values, okay, 0.0083, and I'm going to add it to 134.65, and I'm going to come up with 135.48. So all I'm doing is I'm adding my values that I got from the range, okay, and I'm adding them to the open of the next bar, which happens to be the close of this bar, all right? I'm just not showing the next bar I'm not showing it. I'll show it to you in a second. Okay. Then I'm going to take my 0.0133, which is the 618 value, and I'm going to add it to the open of the next bar, which gives me 135.98. So let's put that up right here. 135.98 right there. Okay. And then I got one more, where I'm taking the open of the next bar, which is 134.65, and I'm adding 0.0177 to it, and I'm coming up with 136.42. So I'm going to come up over here. All right, terrific. Now I got my upper levels, okay, that I get to gauge price action at. All right. Now what I'm going to do is I'm going to take the same values that we got, and I'm going to subtract it from the open of the next bar. Okay, so I'm going to take my 134.65, subtract 0.0051, and I come up with 134.14. I'd like you guys to do is actually go and practice this, and so you can actually see what I'm talking about. It's very important. So 134.14, that 13.4 is close enough. 134.65 minus 0.0083 gives me 133.82. So 133.82, where's that guy? 133.82, close enough. Okay, then I'm going to take my 134.65 minus 0.0133, and I get 133.32. 133.32, close enough. And then our final factor is the 134.65, which is the open of the next bar, minus 0.0177, 132.88. So here we are. Okay, so now we got our range, our upper and lower catapult levels. Again, now what is this for? Well, basically, it's to gauge momentum. What's going on? We want to see what happens at these price levels. If we can break up through this price level, most likely we're heading towards the next price level. Now, the idea is that if we buy this for whatever reason, we say, okay, we think the marketplace is it's breaking up. So we buy it. We know that we could put a tight stop loss below it, maybe 30 pips below it. You got to give the market a little room. But obviously if it comes down to the lower levels, okay, and then starts coming back up, well, we could buy it again, or we could sell it looking for it to break the next level. But where's our stop? Well, it's a tight stop right above this level. So now we have an instrument, an indicator telling us, hey, if the marketplace breaks through here, we could take a short. It's no problem. All right, but really we want to put a tight stop loss on our short. So let's just see what happened on the next daily bar. Look at this. Marketplace opened at the same price as the close. Marketplace traded down. Okay, it just within a couple of pips of our indicator turned right around, broke up through the top of our two levels, okay, and actually settles right here. So we had this indicator up. Now I'm not going to say that we bought down here and we sold up here. But this is just giving us the idea for the trading day. We have an instrument to look at. We have a flight panel to look at, giving us an idea of what we can do. Even if we decided to sell this, looking for a break, well, we knew we could put a really tight stop on it and not get crushed on the day. And that's the whole idea. So, I'm not trying to say that you're going to trade and make this right all the time. I'll never say that. That will just be a bunch of hooey. But I'm trying to tell you is that now you have a reason to take a trade and a reason for a stop. And if the marketplace doesn't want to go, well, now you say, well, look, the marketplace seems to be bid. It seems to be wanting to go up. So I can go long, put a stop loss tight, below this level. Okay, and the marketplace traded up, and you could have made some good amount of pips. Now, another thing that this does for you is that it actually gives you levels. So if you want to go about your business, you want to place a trade, and for whatever reason, you say, oh, the marketplace has been coming off. So really, look, I got a Fibonacci level here at 135.75. I got a Catapult level at 135.98. I could sell, say as close as I can get to 135.75. Well, I got a level right here, 135.48. I could sell 135.48's. Stop loss has got to be above the fib level, or if I want to be aggressive, go right above the next Fibo Catapult level at 135.98. So you could actually place an order, to sell here. Say you sold here. And well, at the end of the day, you sold 85s, and the market closed at what, 135 the figure. So it's 80 pips. That's not a bad day. And you had a reason to do it. You had a pre-planned reason to do it. Or if, let's just say this was wrong. If you sold this level, you knew your stop was at 99. So you sold 60s and you lost 40 pips. If it was wrong, it wasn't wrong. It worked. But I'm just trying to, I'm trying to be as open as I can about this. You can't always, grab the right side, but at least you now have a tight stop, and you have an indication why you have that stop. Okay, so that's how you would do it on the daily. Now, when this marketplace closes, right, well, you'd have to do the same thing again. You would take the range of this bar, okay, just like we did, top and mice bottom, and then multiply by those catapult levels. So those are your catapult levels. Read them down. The range multiplied by 0.236, 0.382, the 50 if you want to use it, 618, or the 0.82. Up and down. So now you got the thing going up and it going down. You got your levels off of the price range of the previous bar, which is important because that was the expression of supply and demand the day before. And don't forget, traders hold positions, bank traders hold positions, hedge funds hold positions. So there's going to be some really interesting action that happens at these points. All right, so now we're going to look at a 4-hour chart. So we can set it up on a 4-hour. So I'm going to just put this on pause, get a drink, and I'll do a 4-hour with you. So hang tight for 1 second. Okay, so let's get rid of all this stuff, and we'll do a 4-hour, a recent 4-hour. Why not, right? So we can take you through the steps. X hours, 2, 3, 4-hour chart. Okay, come over here. All right, so if we want to basically measure this marketplace, okay, well, we have this supply point right here, okay, and we go to the left to the last time the marketplace traded at the same price or higher. We find this price. What's the lowest point in between this price and this price? Well, it's this one. So we want to grab a Fibonacci tool, throw it down. Now we got our basic support points for this leg that we're looking at, the most recent leg that we're looking at. Perfect. Okay. So we have this bar that just closed, and we want to calculate the Fibonacci catapult level. So let's all do this together. So I hope you got your pen and paper and you got your calculator handy. We got the high of the bar, which is 136.43. Okay. We got the low of the bar, which is 135.87. We're going to look just what's the open of this bar. It's basically the same price as the close. I told you 99% of the time it will, but there could be some times that you get gaps like this. See? So if you did want to do it on this, you'd be using the open of this bar to get the range. The Fibonacci catapult levels up and down. Okay, but we didn't have a gap open here, gap down open. We didn't. We just basically had a normal marketplace. Right? There was no craziness. There's no parabolic moves. So the open of this bar is 136.12. Let's just look at the close of this bar. Close is 136.12. So it's the same. Okay, so we got the close is 1.30. I'm sorry, the open is 136.12, the same as the close of the previous bar. Okay, or 10, same thing. A couple of pips is not going to make that big of a difference. Okay, so we got a high of 136.43. We got a low of 135.87, and we got an open of the next bar at 136.10. So what are we going to do? We're going to get the range. 1.3643 in, 1.3587 out gives us 0.0056 for our range. Okay, and we know the open is 136.10 of the next bar. Okay, so the next step is to take this 0.0056 and multiply by what? 236, right? And we're going to get that value. Then we're going to take our 0.0056 and we're going to multiply by 0.382 and we're going to get that value. Then we're going to take our 0.0056 and we're going to multiply by 0.618. We're going to get that value. Then we take the 0.0056 and we're going to multiply by 0.82. And we're going to get all those values. Okay, and then we're going to add them to the open and also subtract those values from the open. So you want to put on your pad, add to the open, and then we'll do that, and then we'll get all the values that we need, and we'll subtract from the open. So let's go. 0.0056 times 0.236, and we come up with 0.0013, 13 pips. 0.0056 multiplied by 0.382, and we come up with 0.0021. 0.0056 multiplied by 0.618, and we come up with 0.0035. 0.0056 multiplied by 0.82, and we come up with 0.0046. Okay. Now you could have done this on the daily and also done it on the 4 hourly, so you can see where it falls in between the daily and the 4 hours. That's another good thing you can do. But for expediency's sake, we're just going to do it on the 4 hour. You can do it, practice it on the daily yourself, so you can actually see this. It's real important. So we're going to take 1.3610, which is the open of this bar, and we're going to add 0.0013 to it. Then we're going to take 136.10 and we're going to add 0.0021 to it. Same thing, 136.10. We're going to add 0.0035. 1.3610 plus 0.0046. Okay, we're going to add this all to the open. Then we're also going to subtract it from the open. So 1.3610 minus 0.0013. 136.10 minus 0.0021. 136.10 minus 0.0035. 136.10 minus 0.0046. So let's get all those factors, okay? 1.3610 in, 0.0013 out, and you come up with 135.97. That's the lower one. Okay, I'm going to do the subtraction first. 135.97. 1.3610 in, 0.0021 out. We got 135.89. Okay, 1.3610 in, 0.0035 out, 135.75. 1.3610 in, 0.0046 out, 135.64. Those are all lower levels. Okay, that's our lower levels. Now we're going to do our upper levels. 1.3610 plus 0.0013 gives us 136.23. 1.3610 plus 0.0021 gives us 136.31. 1.3610 plus 0.0035 gives us 136.45. 1.3610 plus 0.0046, 56 obviously, 1.3656. All right, terrific. So let's take our horizontal lines. And we got our upper level, 136.23. So let's throw it up there, 136.23. Okay, close enough. Next level we got is 136.31. That's close enough. Then we got 136.45. Right there. Then we got 136.56. Okay, now our lower levels. Okay, we got 135.97. Close enough. Then we got 135.89. And we got 135.75. And then we got 135.64. Okay, now we're looking for confluence of price. We have one right here. We have a Fibonacci level right here plus our Fibonacci catapult level. So really, what we'd be saying is, let's just open this up a little bit so we can see it better. We got our upper levels here, our lower levels here. So what can we do? Well, right now, if we wanted to, we could say, okay, look, the marketplace is tracking down. Now, what I like to look at, remember I was talking about down closes and up closes? Well, this is basically a down close on the 4 hour, okay? I would be more inclined to try to buy one of these levels down here with a stop loss to get a push back up and escape at one of these catapult levels up here. Now, if we get a parabolic move back up, okay, leave it alone. But I like to look at expression of demand and supply on the previous bar. And that's a down close, okay? And you notice the marketplace came down, it touched one of these levels and came back up. Well, I'd be more inclined to try to buy a dip, okay, with a tight stop loss. If it doesn't work, I just quickly escape, Okay, I could use this level to escape at. But notice what we did. We just basically took a 4-hour chart and we broke it up into really tight levels. You can't beat that. So you can trade a 4-hour chart with very, very, tight levels. Now, here, a break up above this fib level. Okay, we could buy it, go long, all right, with a really tight stop loss. So you could see how, you could apply this using price action, trying to gauge price action to take a buy or a sale, okay, and put a very tight stop loss on it. Now, this is also a way to get in, the train before it moves. Okay, so I'm going to leave you with that, on this lesson. We went step by step through the Fibonacci Catapult. Went step by step through, how to properly draw Fibonacci retracement levels. And I would like you guys and ladies to go back in time. You can go anywhere you want, on a 4-hour chart and say, okay, look, I'm starting on this bar. This bar just recently closed. Let me do, catapult levels and see what goes on. Now, how do I find my, my Fibonacci levels? Well, that's what I want you to do. You say, okay, look, I got this supply point here. I go over here. I'm measuring this leg. I can pull my ratios down. This way I can see what's going on. And you notice, like, if you would have done this and you had a catapult level and it broke the catapult level, you're also breaking Fibonacci levels. And this was a nice move in a 4-hour. I mean, the range on this bar was probably what? 140, 83 to a low of 139, 45. That's a nice move. And what this indicator I'm giving you is going to give you the ability to basically be able to get in one of those with a very, very tight, stop loss, which is what we're trying to do. We're always trying to get in, in the move when it's in its infinity, not, when it's matured. Okay. Now look at this. Now we're coming down to a catapult level right now. Let's just see what happens for a couple minutes. Just open this up for you guys. See how we came really close to this catapult level? It's kind of hanging by it, Now you can gauge your price action. You can watch your marketplace. Like I said, this is a down close. I'd be really more inclined to try to buy it right around this 35.90. Look at this, because this was a newly almost. We don't know if it's a demand point yet. This 4 hours has to close, but right here was where a lot of people bought back. Because it created this upward movement again. So there could be people that are still short looking to grab some. So you might, you get a push down to this level. You could buy it with a tight stop loss. So if you're getting a zoom, you could sell it, put a stop loss up at this catapult level. This is what it's all about, gauging price action. So, like I said, just go back in history, go to your 4-hour chart, go to your, you figure it out on your daily, do it on your weekly, and you can see how this would be a really great little indicator that you can use to help you fly with your instrument panel for once, instead of just flying by the seat of your pants, because we're putting a perimeter around the marketplace, just for those last 4 hours, and we can really focus in on the price action of what's going on right now. And really take an educated trade now, and regardless whether it's right or wrong, you're going to escape out with very little loss. But if you're correct, you can really get a good zoom, really, really good push. So, all right, guys, I hope this was a big help, and ladies, and I look forward to working with you in the Forex Income Maximizer live trading room, where we're actually using all these different indicators, searching for trades, and taking them and explaining, why we're taking them. And we'll make lots of pips together, and I know you're going to learn a lot of great stuff that you've never seen before, not rehashed junk. It's just real stuff that I was taught and that I expounded upon and made my own. So I look forward to you guys seeing you on the other side, working with you guys, and having a great time together. Have a great day. Ciao.